All right.
portfolio.
Here we are with Alice, and she's going to share her portfolio on TradeDiff, and we're going to describe kind of what some of the categories.
You can share your screen, Dale, and with her portfolio if you like.
Oh, okay.
Oh, okay.
Well, I thought you just wanted me. You said you wanted me to. Oh, okay.
Share my portfolio.
Yeah.
All right.
Go
Let
to
me
her. Go to her.
bring up. I've got her stored under a bookmark here. Alice's portfolio. So.
Perfect.
Here we are on your portfolio, Alice.
Yep.
All right. So now go ahead and start over with what you were talking about.
All right. So here's, Chewy. And right now, the ticker that's what the ticker, this is kind of the price of Chewy currently. And this is the price of the change on the put. So Chewy went down 4.29% today, and your short put option went down 28%. A description is when there's a minus here, it means you've sold a put. Another way of saying that is that you're short a put.
Yeah.
So
Yeah.
+1 means you're long, and -1 means you're short. Strike means that the strike price. ITM means in the money. So it's currently in the money.
Alice, you asked us about in the money, right?
Yeah.
So when you look at this strike column, it has a big ITM next to all the in the money options.
Yeah. Okay. Mm-hmm.
And if Chewy's is trading at $46.94, any strike price that's below $46.94, since it's a put, will be in the money.
Okay.
In this case, your strike is 47.
Yeah.
47 is, so is that right?
Yeah.
Is Chewy trading at 46.94?
Yeah.
Well, then 47 shouldn't be in the money.
Yeah, her put is 40. Yeah, it's in the money. So she has a 47 put strike.
You're right. So it went down below 47.
Below 47.
Yeah.
Yeah.
Barely in the money, but
Yeah,
notice it's barely in the money, but that's why you have a profit on that, because it's not even in the money yet.
Right.
Barely.
So this day P&L is kind of how much that current option made today.
So Alice, the first two things you should look at are, I think, day P&L and open P&L. And Dale, you can explain why.
And open P&L is basically what you've made since you opened that trade.
Okay.
Realized is how much you've made on any trade that have been closed.
Oh, okay.
Yeah.
Okay. Initial is what you initially collected.
So real quick,
sold that option.
Real quick, Alice.
Yeah.
In realized.
Yeah.
Under the realized column, when you roll trades and continue to trade Chewy, if you trade Chewy every week and you trade Bank of America every week and Microsoft every week, that realized column will start to show all your profits from the past.
Okay.
It'll keep track of it for you, so you can continue to see how much you've made on Chewy over time.
Okay.
Initially means on your the initial amount that you collected when you made that trade.
All right.
Market value is if you closed that today, how much you would close it for. So if you collected $55 and you could close it for $15, then your profit would be $40.
Okay. 55 minus 15.
Right.
Yep.
Which is the number in your open P&L.
Yeah.
Okay.
Right.
Got it.
Right.
Yeah. Extrinsic is the extrinsic value of the option. I identified this, Mike, as I hover over this. Extrinsic is misspelled there. So
nice.
Percent of in it is your percent of your initial market value that your trade is now worth. Now, I don't know, have you watched Tasty Trade, where they sometimes advocate closing something at 50% of max value?
No.
Okay, so that maybe. So, but when you get into options where that's relevant, you may decide to do that, but this tells you what percentage of your initial amount that you collected that it's now, if you were to close it, you would have collected. So the reason that's relevant for Mike and I is sometimes we're closing certain trades at 50% of max value. So as soon as this gets down to 50%, we're closing it and rolling it to the next month.
So
Margin is how much in buying power that it's holding. Go ahead, Mike.
yeah,
500.
yeah. So
$500.
I want to say a couple things on the percent of in it.
Yep.
Alice, so this is not something. This is probably something that a lot of people who sell options want to keep track of, because if your number goes down below 50%, that it turns yellow like that.
Yeah.
So you see how 27 is yellow, and
Yeah.
the rest. So basically, you can quickly see which one of your options are getting down to below 50%, and you can decide if it's really low, you can decide to close it for profit, or you can decide to let it expire worthless.
Let it expire.
It's a good number to track, because a lot of people look for 50% or less.
And so it may not be meaningful to you now, but as you become more educated about options trading, this percent of in it might tell you what you need, that you might need to take action on something.
Right.
Some of these other things, this is percent away. If you hover over anything, it tells you what it means. So this is the percent distance from the strike.
Oh, yeah.
So Dale, can you do me a favor and expand some of the other ones below it?
Yep.
Like, what happened? You hit click back or something. So just expand some more Chewy, expand some other ones like Microsoft.
Okay.
Yeah, there you go. Now go back to percent away.
So when he's saying expand it, you can just click on this little plus and it shows you exactly what's inside there. So that's kind of what we're doing.
So if you go back to the percent away column, Alice.
Yeah.
So you can quickly just see that the Chewy is 0.13%. So it's very close to the strike, right? But the other ones, you can see that which one is this? 13.6. That's still a very far away from the strike, the put for
Bank of America.
And that's why it's almost worthless right now. So percent away is kind of just to give you a little idea of how far away your strike is from the stock.
Okay, so what is a good number?
That's up to you. I don't know. I mean, Dale uses delta. Like he uses 30 deltas, right, Dale? 20.
On naked puts.
Yeah, something like that. Yeah.
Yeah, anything that's a 20 to 30 delta.
Which I think translates somewhere to like.
It translates somewhere to 30 delta. 30% of the time it will hit your strike price. 20% of the time it hits your strike price. So the 30, you'll have like a 70% probability of profit. The 20 delta, you might have an 80% probability of profit. So it's not a matter of good or bad. It's like higher probability or lower probability. So truthfully, you'll probably make more profit at the 30 delta, but you'll spend more time kind of dealing with adjustments.
But it really depends on what you're trying to do.
And it determines kind of your risk level.
You may want to sell options closer to the money, but you may have that. You may not want to. So I don't know. It all depends on what your portfolio is doing.
Yeah, and if I was doing a wheel strategy, I wouldn't be afraid to sell 30 delta.
Yeah.
Or even 40 delta, because I really wanted the stock anyway. So if it goes down and I end up owning the stock, I wanted it anyway. So
right.
I don't mind selling it close to the money if I'm trying to get the stock.
Right. And then you get more credit.
More credit, but it's more risky. That's all.
On the other hand, if I perhaps don't have enough in my account to buy the stock,
Yeah.
truthfully, I don't really want it that bad because I don't have the money in my account. So I might sell it further out, like more like the 20 delta.
Yeah. Well, I find most of the time you can just let it expire and then you just collect the credit.
That's
Yeah.
fine too. That's fine too. If
Yeah.
you're doing this on a weekly basis, that might be a good strategy. That's fine.
Yeah, I
And-
do it weekly.
And
But-
you know, I might just split the difference and start selling like a 25 delta puts.
Yeah, I mean, what you could also do, Alice, you can do a lot of different things. If it hits 50% of in it, you could start selling the next week if you want, you know, because they say that there's more money. The rate of decay will be faster if you roll it out to the next. But that's to me it's up. That's up in the air. The jury's still out. You know what I mean?
Well,
Yeah.
a lot of time I look at my percentage, it's like 87, 90. When I have 87, 90%,
You roll it.
I'm not too sure what to do. Like I know if when I close it, I will get my 90% money. Am I correct?
I think that's good, but I think my goal is to build the skills for a real account, and I try to kind of be mechanical. A mechanical means you just do it kind of almost without thinking, and you know, if it's getting close and you don't want to let them exercise into real stock, then every Friday on expiration, you just make a note to yourself to roll them all out.
Yeah.
The bottom line, Alice, is you can try different things and you should try different things. And,
Yeah.
and the paper trader on TradeDiff is perfect to do that because we track all your performance. You can see it back in time and later look back and see which one you did better in.
Yeah.
I'd like Alice to go ahead and share her screen, Mike, and let us coach her just through closing out some things and reestablishing.
Let's get rid of some of her expired options and
So why don't you go ahead and share your
Okay.
screen, Alice,
All right.
and go on to TradeDiff.
All right. I already shared.
You shared?
Yeah, I did. Oh, it say disable.
Yeah,
Post
Dale,
disable.
you have to enable it.
All right, I just enabled it, so try it again.
Is there a setting you can just say?
I don't think so. I think its default is towards that. And this is, I can explain why they did this. So go to TradeDiff.
Yeah, here's me.
Okay, expand TradeDiff.
Oh,
Right.
can I make this smaller? All your people, like all of you are on my, I just wonder, is there any way I can make it smaller? It's kind of,
Okay. If you can hide the thumbnail of our picture so you just see your screen.
Just hover over the picture of us and then hit that little, like there should be an X.
yeah. And then what do you do?
In the upper left, it says hide thumbnail video.
Oh, okay. Yeah. Okay.
Okay.
Okay. Yeah. Okay. Good.
All right, so now scroll down and click a plus sign next to something that you want to roll or close.
Okay.
So like right next to Chewy, click that plus sign.
I want to see when is my expiry date.
Okay,
for that.
hold on 1 second. So just to make it easier, because I think what I need to do, Dale, is actually make the UI a little more different, so people don't have to see that. So the plus sign will also add some values to the trades to the selected area up top, and that sometimes could be confusing for people. So if you want, you can click in the like right there and like go down to let's go to which one are you going to close?
Oh, well,
Just go ahead and close Chewy's because it expired today.
it's already expired.
Yeah.
Okay.
So, but just go ahead and right click on that and choose the word close. And then submit.
Oh,
Okay. Mike was going to disable that.
that shouldn't. Oh, I see. I know I did.
That's okay.
Okay, so
I know how to close it.
that's how. Okay, so that's how you do it. How about this, Alice? I forgot to do something on your portfolio. So that's how you close it. You
Yeah.
just right click,
Yeah.
and then you close it. And then all you got to do, if you want to roll, you just go back to and make a new trade for next week. Does that make sense?
So
Mike,
if I wanna roll,
how about if we have her put on a new trade? Will it let her put on a new trade for next week?
Yeah, that should work. So let's do that.
okay.
All right, and these are all of your closing today are gonna cash settle, so you don't really need to even worry about closing it. But now you know how to do it.
So you mean when I want to roll, I can click this roll here, it will roll it for me?
It's not currently that rolling is not working. It's in development. So as I texted you, I think a few times, you're gonna have to just close it and reestablish it.
Okay.
Let's go ahead and make the trade that you're going to make next week.
Okay, I want to buy all the fan.
The what?
All the fan, like Facebook,
Okay.
Facebook.
Well, that's not a bad idea because Facebook is down like 8%.
Facebook symbol is FB.
FB.
Okay.
All right, you're wanting to buy Facebook?
Yep.
So,
I like all the fan.
Okay.
Okay, are you wanting to, now there's a couple of different ways that you can get bullish. Are you gonna sell naked puts on Facebook?
Yeah.
She's just selling naked puts now at this point, right?
Yeah, because I don't want to mess up myself.
That's fine. We think that's a good idea. Just go ahead and sell naked puts then.
Yeah,
Okay.
because I don't want to mess up my thinking.
Your mojo.
All right, right now it's $216. Let's see. This is July 2nd week.
That's a weekly one. That's good.
Okay, 216. Well, 260.
All right. There you go. So the 215 is the last one that's in the money call. So
yeah. So I have.
So I'd say find something that's probably a 25%, so it's somewhere around
Look at
like
here.
the 205 would be good.
That's the delta column. So Dale saying 25%. So maybe the 205 is good.
Yep.
Let's see.
But again, that's up to you. If you want to take more risk, you're allowed to go closer to the money, but it's just a suggestion, right?
Oh yeah, right.
You only get $200, $250 for that 205. If you want to get $500, you can go 215, but it's a little more risky. It's up to you.
Oh, okay. Well,
I'll
do the middle one.
All right.
Not too risky.
Well,
Yeah, a middle. What's the middle over here?
To me, a 205 would be about a 24% probability that it exercises out.
This one.
Yeah.
Yeah. So we're just simply asking you, do you want the $250 credit? What you want? Is that good?
Oh, okay. I'm okay with $250.
Okay.
So what is 24%? Is that is a probability of?
That's the probability that it will exercise in the money. So that means there's a 76% chance that it'll exercise out of the money, which is good for you, and it'll expire worthless and you keep it.
Okay.
It's probably easier just to think, Alice, it's 24% chance that it's going to expire in the money. That's all.
Yep.
Oh.
And then that way.
So if it's 24%, is it good, or 50%? Is it good?
I know you're thinking about, is it good or is it bad?
Is it good for me if it's good for my benefit?
I know you're thinking, is it good or is it bad? Which is the typical way that a new option trader thinks. And it's not good or bad. It just is.
How much do you want?
How much risk do you want to take?
I don't want to take a lot of risk.
Okay, well, there's a 76% chance that you're just keeping the $250 and not having to pay.
This one is $250. Is it this one that means $250?
Let's look at it this way. If it goes down to 205, you need to be prepared to spend $20,500 to own 100 shares of Facebook.
20,000?
20,000. It costs you $20,500 to
Oh,
own 100 shares of
wow.
Facebook at 205.
But yeah, but you never have to spend that much money because you don't plan to buy it.
No, but you're prepared to if it does go down to 205. Are you prepared to do that, or you have to close out the option?
I think she's saying she's going to close out the option no matter what.
Yeah, I hear you. But a lot of times people, remember I told you the wheel strategy?
Yeah,
If it goes down, you end up getting the stock,
yeah,
and you feel comfortable with that because you like the stock at that price,
yeah,
and then you turn around and you sell calls against it.
yeah.
So if you feel comfortable owning it at 100 shares at 205, you've
So my perspective is I try not to own the share. I'm just trying to collect credit and not own anything because it costs too much money to own it.
Yep, that's fine. So here's basically, if you did this for 12 months, on average, 2.4 months, 2.4 times out of 12, you'd have to, it would go in the money.
Okay, all right.
If you did it for every week for 52 weeks, there would be basically 12 weeks out of those 52 weeks that it goes in the money.
Okay, how do you calculate it? Can you tell me how do you get the number?
I just multiplied 0.24.
0.24? Where?
You just said at 205, it's 24%.
205? Where's 205? Right here?
The 205 strike.
Yeah, okay.
Okay, if you go 2 to the right, there's the bid and the ask, and right next to that, it's got 24%.
Okay, 24%.
Okay. So I took 0.24 and multiplied it by 52 weeks.
Okay.
And that equals 12.5, 12.48. So which
Okay.
basically means if you did this 52 times, 12 times it would go in the money.
Okay, 12 times I will earn the money.
No, the other times you just keep the money. If it goes in the money, you're going to have to close it at a loss or take the stock.
Oh, okay. Well, I don't really understand a lot yet, but let's leave it like that. So I know my objective. My objective is to just buy it to collect credit. So I'm gonna do it every week. Now. And what is benefit for me to choose if I want to do it every week and not to buy the stock?
I think we're making this too complicated, Alice. If you want to do it every week, it's fine. Just pick a strike that you're comfortable with the risk and the reward. I think so. I think the 24. Okay. I think the 205 is fine. Do you agree? Do you agree, Dale?
Okay. Yeah, I think she wants us to tell her exactly what to do and whether it's good or bad.
Oh, yeah.
I think the best thing for you to do is just sell this 24 delta every week and monitor your results.
Yeah.
Basically, Alice, fine. You don't want the stock. We know that, right? You don't plan on taking.
I don't want it. Too much money.
If you don't want the stock, then we would probably suggest going a little further from the money to give yourself some wiggle room for the stock to go down a little bit because you don't want the stock. If you really wanted the stock, you might just, you might sell the 215 if you want. But since you don't want it, just go ahead and go 24 delta, 205. So click on the 252 ask.
Sell right here.
There you go.
Yeah.
Okay.
Red is always sell. Green is always buy.
Okay, I'm selling, so and I will get.
You gotta read those values right there below the free naked put margin data.
Yeah. Okay, I know. My strike is 205. I'm selling a put I'm collecting credit of $2.62 and expired next week, July
Yep.
2nd on Friday.
Right.
Submit.
All right.
Okay, let's have her organize it, Dale.
All right. Go up to the cog, up to the top.
Yep.
Have you? She's already established
She already,
that.
she already has her.
Yeah. Okay. Scroll down to Facebook.
Facebook.
It's
Into
under new trades.
Oh, I go straight to options. My bad.
Option.
Yeah, there you
Okay.
go.
Right click on Facebook.
Right click. Right click. Left. Right. Okay.
And then scroll down to naked put. See where it says naked put right underneath
Yeah.
group?
Yeah.
Okay, so that'll put it in naked put. So
So
go up and
let's do all of this for now anyways. Even though they're going to expire, let's just have her do it.
okay. Go up to and right click on Chewy's.
Okay, right here. Right here.
Group all those. So
And put it
Alice,
under naked put.
Alice, you should do this every time you make a trade because
Okay.
TradeDiff will track these for you in a certain group and give you a lot of analytics that's important for your tracking.
Okay, what do you want me to group it together? I don't understand.
Okay, you're putting since the only thing you trade is naked puts.
Yeah.
Every time you make a trade, right click on it and put it into the category of naked puts.
Okay.
Right. That way TradeDiff will tell you how good you do in naked puts.
And then when you start trading another strategy, you can compare how you're doing in that strategy against how you're doing with naked puts.
Right. So Alice, in the future, you will have another group besides naked puts
Okay.
that you can track and compare with later.
Okay.
And
When you're ready.
And we'll decide what to call that once you decide what your next strategy is.
So do
Okay.
Chewy. Do Chewy again.
Chewy.
Yep. Right click.
Mhm.
It's okay. Just scroll down. You actually could click the.
You
go
want
down.
You
right
click the plus button, just right click
so you want me to right click?
Yeah.
and choose
Okay.
naked put.
There.
If in the future, if you ever have things that aren't in the category of naked put, then you haven't placed it anywhere yet.
Oh, okay. All right. So this is all my naked put. I got 10 of them.
Yep.
Okay.
And then the ones that will expire, they'll disappear from your account tomorrow.
Oh, tomorrow it will disappear.
The ones that are expiring. So
Ah,
if
okay.
you look at your portfolio, you can see that in their expires column, it has all of them are expiring, one
Yeah.
expiring, and then you can see that there's 1, 2, 3, 5 in the money. So
Facebook, it should not be expired. Look at
actually,
this.
the reason why it says that is because I just defaulted that note to come up when it expires within a week. So because they're expiring next week, it shows you one expiring next week.
Oh,
It basically says anything expiring within a week is going to show that when it's expiring.
okay. Got it.
So I think we've demonstrated one of what you're going to do. And so what I'd like for you to do is to go through all of these yourself and pick a strike that's closest to 24%
Okay.
and for next week and then sell it.
Yeah. Okay. I can put a whole bunch of stuff here and see, look, you look at all this thing, all this, I'm losing money. Am I losing all the money here?
Yes, you are, because
the open P&L is what you want to look at. It looks like you made money on the Costco one. You made money on Chewy and BAC.
Well, this one do I actually making $169 in Costco?
Yeah.
Let's see what is expired in Costco. Costco expired today.
Mhm.
Yeah. And it's above the strike. It's above the strike. Your strike is 295. The stock's 296. That's why you made the complete 100% of the credit.
Oh, 100% right here, right?
Mhm.
Where's 100%?
Well, you always make 100% if it closes above your strike price
Oh.
on expiration. And Costco because I want you to understand kind of exactly what you're doing when you're selling naked puts.
Well, yeah, I kind of understand because it was 296 and I strike it 295.
Yep.
1 week later, and it didn't go to 295. So I'm collecting money.
So you collected the entire 100% of what you sold in the beginning.
Yeah.
And I know that you don't intend to buy the stock, but it's important for you to realize that you are under an obligation that if it goes down to 295 or below.
Oh yeah, I don't mind. I don't mind Costco. That's actually all the fan. I don't mind to own. But if I don't have to own it, then I don't own it.
But also, Dale, we should probably mention that even if it goes in the money on the last day of expiration, you can still close it. Maybe.
Yeah, that was the second part of my sentence I was getting to.
Even it what?
You may not have to. You don't always 100% of the time get the stock. You can possibly close the put for a loss on the last day or something like that, maybe.
Right. But then I will just let it expire because it's just so close to my 100%, right?
This one's fine.
It is already expired.
Yeah,
we're saying if the put was in the money expiring, then you have to make some decisions.
This is a paper trading account. So, but if this was not a paper trading account,
right,
and I didn't want to take possession of the stock, I would make sure you roll it before it expires if it's in the money.
Yeah.
Okay.
Otherwise, you're in a real account, you're going to wake up and you've got a bunch of stock that you didn't really want. And now on Monday, you're at risk of owning 100 shares.
Right.
And maybe you didn't have $23,000 in your account. Or let's assume 5 different ones are all exercising on the same day and you don't have that much money in your account.
Yeah, right.
So, which by the way is a lot less scary than it sounds, because on Monday you probably have time to close those stocks, to get rid of the stocks, and you wouldn't be losing more money than you would have had you still had those puts.
No, but it will scare the bejesus out of you.
It will be very scary when you have a negative $300,000 buying power in your account because you have 100 shares of Amazon and Google and all that stuff. So
yeah. So the first time that happens to you, you may freak out. There was a kid who didn't know what he was doing, and he woke up and he had like this $700,000 margin call, and he thought he had lost it, and he ended up killing himself because he didn't understand.
Did you hear that, Alice? Somebody committed suicide trading options.
Really?
Because they thought they lost $700,000, but they didn't.
And it was a kid, and he was a college student, and it's so sad, but it's a tragedy. But it's a tragedy based upon a person that didn't understand what they were doing, and it wasn't the catastrophe that he thought.
Yeah, the thing is, the kid, they thought, I can play around with it, but then even though he owed $700,000, then what happened? If he doesn't have money, then what happens?
It's a non-issue, but because it didn't happen.
It didn't happen.
So anyway, I don't want to get us distracted.
Yeah.
Okay. Good.
So let's go through what we've learned. You've learned what all of the different categories mean.
I learned all that.
If you don't remember it, you can go back and watch this video.
Yeah, that's good.
You've also learned how to close an option.
Yeah, I did.
And you've learned how to reestablish it. And we've decided for now, the closest to 24% probability is probably a good spot for you to sell puts at.
Exactly.
Okay.
Yep.
So I think that you've learned what you need to do to go through and sell the rest of these, and those that have expired today will go ahead and fall off of your account.
Right.
And Dale, I would like to share a couple things real quick.
All right.
That I think would be worth it. So
let her stop sharing her screen. Is that all right?
Not yet.
Okay.
So Alice, looks like you're good at making trades. You know how to do that, and you know how to organize your trades, put them into the group, right?
Right.
Those are probably the two most important things that you can learn right now. I just want to ask you a couple quick questions. Do you know how much? Do you know where the value? Do you know what number tells you how much your portfolio is made today?
Let me look.
Yeah.
Well, where is it now?
Okay, well, it's up at the top right there. Up at the top, right, the balance. It says balance on the left.
Balance.
Every day your portfolio, when you right there, balance up.
Oh, here.
Yeah. So every day you look at your portfolio, you open a portfolio, it says
Oh,
balance.
yeah.
Today you lost $427. Okay.
Yeah,
so,
yeah.
And then if you go to the right, it has a realized, it has total. So your total is how much you've made completely since the beginning, and since the beginning of the year to date.
Okay.
And what's also interesting is if you go right again, it says versus S&P and versus NASDAQ. So this is how you're doing compared to the indexes. Okay.
Okay.
But that's important because a lot of people use this as comparison to show you how well you're doing against the S&P. And right now it looks like you're doing better than the S&P and the NASDAQ because the S&P is down 3.4% since you started this portfolio, and you're down 0.2%.
How would you say, where do you say see 0.2%?
Your total ROI, if you look at your total ROI to the left,
yeah.
it says negative 999 and it says negative 0.2%.
Oh.
So you're actually doing better than the S&P right now because it sold off. So just to let you know, because those are interesting things. And the last thing I want to show you is simply just go up to the top and click on one of those icons. Click to the right, go to the right.
Here.
The left one.
The left.
Right. The one with the next to the bar chart. Hover over the one that says.
Here. Check.
Click on that, and click on ROI.
Well, I don't.
Top one.
Up. Oh, it covers.
The very top one.
Oh, I can because it say talking Alice or whatever. I can't. Oh, let's see. Maybe I can.
You can move.
Maybe I did.
You just clicked on balance.
Oh, this is what I like.
You did it.
This is the one, right?
This is the one. So now if you look at this, Alice, if you go to the right.
Go to the right.
There's lines here that this shows you how well you're doing against the index. So you can see Alice's portfolio is down the red line. You're the red line.
Here.
Go to the right, all the way to the right.
This is the right.
Yeah, so you're down 0.2.
The
last dot to the right.
Here.
Yeah. If you go there, this is where the most recent. You're down 0.2.
Say 0.2.
Which is nothing, but look at the indexes. They're doing worse than you right now.
The index over here.
Yeah, so they're doing worse than you right now. So
is it today? Is it today?
Yes.
Well, since you started trading this portfolio.
Oh, since I started. What day I started?
Earlier in the week, I think a couple of days ago.
Oh, in a couple of days, S&P.
I think you started. Look like your zero is on the 19th.
Yeah, 19th.
I'm on 19.
Okay. Now, the only way for you to get this to update every day is for you to visit your portfolio every day.
Yeah, and I think she's been doing a pretty good job on visiting your portfolio every day, right? Right, Alex?
Yeah, I am.
And so I think she's good with that, which is good. So now you can just go back, hit the go to the left of the screen, top left, and go back to the back arrow.
Here. In here.
Yeah, I did. And then we'll show you one more, and that's it. Just go back to the same up to the top right.
Yeah. Bar. Analyze.
Go to the right one again.
Right here.
The same one that you clicked on last time.
Oh. Here.
Oh, is it being covered by your?
Yeah, talking.
Okay. Well, it's fine. It's fine. All right. So basically, those are the analytics. So if you
Oh,
click
now
the,
I can move it. Come on, I can move this. See? Can you see? I moved
well,
it.
as long as you can move it out of the way and click it.
Yeah. So
Right.
where do I trending?
Okay, now click on balance. And then this will tell you your
Scam.
whoa, hit back. What? The hell? All right. You got some antivirus stuff going.
All right. You
I
want?
don't think so. But anyway.
All right, well, just close that browser. I don't know. I think it's going to be stuck.
Okay, go back here. Where are we?
You want me to stop the screen share?
Yeah, you can stop now. I think we're good. Or
Oh,
stop
right
the
here.
stop the video.
All
Yeah.
right. Well, maybe it's.
Okay, where do I
Yeah,
go?
I want to go back to TradeDiff and see if it works. That was actually shocking. I didn't know that Norton thing was going to do that. Can you still go to TradeDiff, Alice?
Troy Dip?
Does it still work? Try to go back.
All right. Click back on share screen again. I stopped sharing your screen
right.
because.
Okay, share
As long as
screen.
it works, it's fine. I think we showed everything that we need to show.
Oh,
I make
okay.
sure she can get back to the site. I'm kind of shocked to see that.
Oh yeah, I see that all the time.
Oh, do you? Okay.
Every time you did something, you told me to do a notification, and then it come pop up, and they say your website is new, and then be careful.
Okay. Well, I mean, I guess it's telling the truth. It's new.
Yeah, and then they say not too many people are going in there. Be
Wow.
careful. Be careful.
No wonder you're scared to death, Alice.
That's funny. That's actually pretty funny. Dude.
There, it's warning me.
I'm actually impressed that they told her that. I mean, because they're basically, I mean, Alice, to be honest, I think that's actually not a bad thing because it's basically telling you that, look, this is a new website. There's not a lot of traffic yet because we just opened it, right?
On the other hand, there's probably something you can click to tell it that it's okay.
Well, the point is, Alice, what we're trying to say is, even though it tells you that, I mean, I think we're explaining to you why it tells you that because we're a new site. We're not giving everyone access yet. You're like the 10th person we're showing this. So.
But am I the only person seeing this though?
Well, I don't think people have that Norton.
Oh, they don't have a scan. Yeah.
Or they at some point they may click and say, "Hey, it's okay." There's probably some setting on if your virus scanner is popping up on something and you tell it it's safe, then it'll stop giving you those messages.
Yeah.
I think you can tell it that you trust us, TradeDiff, and we're.
Well, let's ask her, Alice. Do you trust us?
Can I not answer this question?
All she's doing is laughing nervously, so I don't know.
Well,
that's not a good sign, Mike. I don't think she trusts us.
Whatever you think, Alice, we understand, but we're going to continue to try to help you because we're just trying to build a platform. We're just trying to build a platform for people like you and other people. And we know we have to deal with people who may not trust us, but our goal is to just make sure that we focus on building the platform that helps people. So at some point, we hope you will trust us, and then
Right. Okay, yeah, but like just then like I am the only person who's not in your group, right? You understand.
Are you the only person that's not in the group? We have 10 people who are currently in a competition.
Yeah.
No, you're not the only person who has at some point used TradeDiff that's not in the contest.
We have 5 other people or so using the site just to track their portfolios.
Yeah.
No. Can I see you guys here? What does it say here? You are screen sharing. And then where am I?
I'll stop the screen share.
Oh, okay. So what I'm saying is you guys have 10 people in there, then you guys know each other, right?
Mike doesn't know everybody. I know everybody that's in there, yes.
You know everybody.
We're basically showing the platform to friends and people that we're talking to first, and then we're going to launch it later.
Yeah. So what happened is Dell, the 10 people knows Dell, you know, that they knows Dell, right? So if you are thinking to launch later, you will see. You will see the experience, how people react.
Sure.
You know what I mean? Like, because I don't know Dell. I only know him in Facebook, right?
Sure.
Yeah, I just want you to understand.
Yeah.
From me, you can see how other people
Will react. Sure.
yeah, because I don't know Dell before, right?
Right.
Dell,
Mhm.
like you know what it's like, right? Like I just want to be honest.
Yeah.
Sure.
We
Yeah.
understand.
Yeah, because I'm not in your circle. So
That's the whole point of launching a business is we have to start somewhere, and we slowly begin to get people to use the platform.
yeah,
And we slowly start talking to people
yeah.
and build trust.
Yeah.
Yeah. So
And
there's probably a friend from a friend, friend from a friend, or something like that. Or I don't know. I don't know how it works, but
okay.
yeah, yeah.
All right. Is
So
there anything else that we want to accomplish today?
no, I'm good for today.
Okay.
Like, yeah, and then I'm saying that Dell, when you're tired, that maybe Mike can take over sometime because today you say you're so busy. So I don't know how you feel about sharing your responsibility. I
Well,
have a suggestion.
we're always going to, if we have time, we'll always try to help you. So I'm building, Dale's busy with a lot of things. I'm busy building the platform.
Yeah.
We have to support, but whenever we have time, I'm happy to answer questions on your portfolio. I'm happy to do Zoom meetings like this. You know, our goal is to make this platform valuable to you. And then we want to make it valuable for, you know, thousands of other people like you. So
Yeah.
we're going to always do our best. When Dale's not
Sure.
busy, when he's busy, you know, and I'm free, I can always, you know, try to help as well.
Yeah, I understand.
Sure.
I'm just giving you a suggestion for Dell because it seems like he have a hectic day, but he still have to come in and
Oh yeah.
you know what I mean? Like you could have
Yeah, we should
take it
thank
over.
Dale.
Yeah.
We should
Mike,
thank Dale for,
Mike, why don't you help me out more often?
you know,
Why am I the person doing all the work, Mike?
Yeah. Why is he always doing the
Yeah.
work?
Yeah.
I'm not. Yeah, I'm just sitting back and enjoying it.
I'll give you the
I
opportunity
have all the
to
free time in
train.
the world. Why am I not?
Mike is just waiting for the cornbread to come out of the
Yeah.
oven.
Yeah, I wake up at 10 a.m. in the morning, and I'm just like, you know, I go play tennis.
What? Is
Well-
that what you do?
No, I'm just what
We're joking.
we're joking.
Mike does so much of the work. I say you have no idea how much work it takes.
Oh yeah, I understand.
To
I
do
do.
the programming and put this stuff
I've been
together.
Alice, we've been working on this for 2 years.
Yeah, and we've been
Yeah,
working on it for two
lot.
2 years, large part. And so, what we have with you, Alice, is a win-win. And I'm going to explain what I believe is your win, and then I'm going to explain what I believe is our win.
Yeah.
Okay. You know, as you know, we haven't charged you anything for any of the services that we've provided, and it takes time.
Yeah.
But our win is we're trying to perfect our site and get it ready for what in the future could be hundreds of people learning from many different people. So that's our win.
Oh
And-
yeah, I understand that when you told me, but then Mike was saying to me, okay, Alan, so we want you to learn it, and then maybe one day you can teach other people and make some money. So I'm kind of wondering how does this work? I don't understand it. You know?
Well, you may or may not want to get involved to that degree. You may just want to learn it for yourself and trade options. And so there's different levels to which people may want to get involved in things. All Mike was telling you would be a vision if you should choose to want to go that far with it is what would be possible.
Alice, you know how you ask questions on your portfolio and Dale and I answer questions for you?
Yeah.
You know, we can do that for like a lot of people, and at some point in the future, there could be other newbies that may want to ask questions, and you can simply just help them by looking at their portfolio on the website. And you know, you may be good enough in a year from now to just kind of answer questions from newbies, and maybe one day, you know, you could charge somebody for that time. That's all we're saying, is that eventually, I mean, you know, I'm building the platform to allow people to do this, to allow people to help other people.
You know how Facebook, there's like Tammy and other things. It's just people helping people.
Yes.
Well, we want to build a site where there's people who are helping people. So a year from now, somebody else doesn't even understand how, you know, naked puts and assignment, you know, you could be having this conversation with this and say to them, hey, when I first started, I chose the 24%. You know,
I guarantee you 1 year from now, you're going to be able to teach somebody about naked puts. I guarantee it.
Yeah. Yeah.
Guarantee. Hey, guarantee.
That's
Dale,
a 1 year. 1 year from now, of selling naked puts on the platform, you're going to know more than most people out there know about naked. I'm telling you this. It's pretty easy.
We have people in our contest that you probably know more about naked puts than they do.
Oh yeah.
This is all I do. This is all I do.
Because Alice, the options is so complex and so large that if you focus in one area and become very good and knowledgeable in one area, you can then teach somebody that.
Yeah, I don't want to go to other areas.
Fine, that's perfectly fine. That's a great idea.
I have a mentor, like he alert me and he always tell me what to do. But then again, he doesn't have a lot of time. When he's not working, then he can have time to help me.
Well,
but now he doesn't have time. So that's all he knows what to do. And then I just thought, oh, I'm going to follow. And then
you're gonna experience a lot of people who don't have enough time to help you as long as they're a volunteer. You know, you're working with volunteers. Yes. You know, we're doing our best to kind of manage, you know, I got my
sorry, go ahead.
You know, I got my pie chart that I'm working. Mike's got his pie chart that he's working.
Yeah.
And you know, but you know, and hopefully you'll there's YouTube videos and lots of stuff you could be doing also independently, and I'm sure that you are to kind of learn your thing. So
no, I'm learning put right now. I'm just saying how I starting to do put.
Sure.
How I'm starting to do put is just.
I sold covered calls for probably 5 years, and that's all I did.
Yeah, that's all I do, and then I like it.
The funny thing is, I've been doing this for so long, and I'm starting to realize, and this is for you, Dale, too. It's like I'm starting to realize that, you know what? I don't really want to trade a ton of different strategies. I like focusing on one or two.
Well, you're kind of becoming the diagonal man.
I mean, I've tried everything. And I'm starting to realize that, you know, trying to trade too many strategies kind of just puts everything as a break even. I think, you know, like if you have like
wow.
But that's a different discussion.
Yeah, that's what I heard. I heard people say I'm just focused on one thing and I'm good at one thing.
Right. No, I agree with that. I agree with that.
You know, like the Facebook. I don't know, Mike go to Facebook or not. Like my Jim, Tammy, and what David Sang. Looks like they all do a lot the OTDE. That's all they do. It looks like that's all they do.
Yeah, and I won't try to convince them to sell naked puts, but I think it's cool that people have different strategies that work for them. And, you know, I did a 0 DTE today, and it was kind of funny. I put on selling both calls and puts. One of them went against me. 3 of them worked.
Yeah.
And I broke even though 1 out of 4 was unsuccessful. So I guess 1 out of 4 would be 75%, right?
Yeah. Yeah.
You know, I'm actually a strong believer that the same strategy can be successful for somebody and a complete disaster for somebody else, actually, too. So like it actually depends on the person. So I think that's an interesting part that I'm looking into myself, is that everyone has their own, every strategy also fits everyone's personality and their style. Like
Yeah.
you can't sell naked puts if you're very, very risk averse, you know, like you're kind of like every little move and also like, oh my God, I'm going to lose money. So like you can't sell naked options if you aren't willing to take risk.
Yeah. So are you
And there's some people who are like our friend Mo, who would never sell naked puts because it's too slow for him.
Yeah, but then he has these. Alice, one of the people that we know, he lost 40. He lost. I watched him lose $50,000 in his real money account.
Oh
in
my.
a matter of days. Because he just buys calls that expire.
Oh my gosh.
And his account went from 20,000 to 50,000 back to zero.
Well, yeah, well, the gambler. We
Yeah.
call them the gambler. But the thing is that is it sound? I want to learn is that selling put. I want to see how risky they are. So if you know this video that will tell me the risk of selling put,
Well,
just shoot it in that area.
okay. We can, but to be honest, I don't know. It's really hard. I don't know. Maybe I don't know what you think about this, Dale, but I feel like the really only way to tell how risky things are is if like you practice trading them and then see what happens when the market crashes or something like that.
Well, there's all kinds of people who do back testing.
It's pretty hard.
But at the end of a year, if you continue to sell put a 4 delta put, 25 delta put, 25% every week, you know, you'll have some pretty good data.
I agree.
Of your P&L.
Alice, I think the best learning tool for you right now is to actually do it on the paper trader week after week after week.
Yep.
Because you know there's nothing that prepares you for tomorrow. Like you can back test something and see that, oh, these puts would have lost a lot of money last month, so I'll just make sure that doesn't happen to me.
Oh no, I don't do back tests because I don't know how.
Do so you know the market next week maybe it continues to fall, and you might see more losses in your paper portfolio, and we can talk about that.
Oh yeah, actually, when you do a naked put, when the market go down, you will lose money.
And sometimes when volatility goes up, you lose money really fast.
Yeah.
So it'll be good to see that if it happens. I don't know. You know, just to see.
Well, we saw it today.
Yeah, today
was
700. In the pandemic crash, it did it for 20 days straight.
Yeah.
But I bought Costco.
Costco. The fact that you made money in one of your strangles and one of your naked puts, I think that was great. By the way, I got to go soon.
All right.
Okay, let's quit it.
So Alice, you know, we hope you're getting value out of this.
Oh, I do.
We really genuinely are trying to help you because we think it'll help both of us.
Yeah, and I'm like the white mouse. We call it the white mouse for testing.
Okay.
Oh, okay. Yeah, you're
a lab rat. A lab rat? Is that what you're saying?
Yeah.
Human guinea pig.
Lab rat.
Yeah,
okay. White mouse. Lab rat. That's
yeah. I am the rat.
All right.
Well,
so, thanks for the opportunity for us to test our recent medical strategies. All right, we'll see you. We'll stay tuned. All right, thanks, Alice.